Most people have no idea how superannuation is taxed. So what I'm going to do is run you through the basics of how it all works. There's a few different areas where you'll pay tax in superannuation. The first part is with your contributions, when you're putting money into superannuation. There's two kinds of contributions. We have concessional contributions and non-concessional contributions. Concessional contributions pay a 15% contributions tax. So as that money goes into super, 15% comes out. But in return for that, you can claim an income tax deduction. So for most people, their income tax rate is higher than 15%. You basically capture that difference there. So you're getting that tax deduction for doing that. The cap on how much you can put in per annum at the moment is $32,500. Then the next kind is non-concessional. So with those ones, we pay no contributions tax with that money going in. Whatever you contribute, that full amount goes in. There's no tax there, but you can't claim a tax deduction. So there's no income tax benefit to making that kind of contribution. The limit for how much you can put in there per annum at the moment is $130,000. Then once your superannuation is actually in the account, it also has to pay tax in there. So when you're in accumulation phase, that's the phase while you're working, your income within that super fund is taxed at 15%. So any dividends that the shares generate, any rent that properties generate, that's taxed at 15%. Capital gains are also taxed at 15% in that accumulation phase, but you do have access to a 1/3 discount if you've held assets for 12 months. The amount that you can have in there at the moment is up to $3 million before there's any other taxes. Then the final stage is retirement or pension phase. So once we get to that point, when we retire, preservation age at the moment is 60, we can start to draw down an income from our superannuation account. Now, once we're in that phase, income, so the investments within your account when they generate those dividends, when they generate rent, term deposits generating interest, all of that income is taxed at 0%. Capital gains are also taxed at 0%. So when you sell an investment for a capital gain, there's 0% tax payable on that. Also, your pension payments are taxed at 0%. So you might have $1 million in your superannuation pension account, drawing down 5% per annum. You get $50,000, that's tax-free. There's no tax to pay on that amount. But that environment there, that pension phase, is limited to $2.1 million based on the current cap. So that's the basics for superannuation tax. There's obviously some really niche cases and some more sort of specific stuff if you fall outside of the sort of standard kind of person. But these are the really sort of high level things you need to know about how tax works in super.